founders, investors, welcome back to Next Round Ready. I'm your host, Chris. We have special guest Alana from 11 Wall Ventures. Alana, welcome to the show.
Hello, welcome. Thank you for having me. Excited to be here. My name's Alana Mann. I'm a general partner at 11 Wall Ventures. We're an early stage venture firm exclusively focused on investing in vertical AI companies, building outside of SF, New York, and Boston. We get really excited about companies building in insurtech, fintech, logistics, and manufacturing. And excited to be here and share more.
I like that you said you're focusing on companies outside of like the main hubs in the startup world, because sometimes founders have told me that they feel kind of stuck because it's like if you don't have the funding or just the overall runway to relocate to those bigger cities, those specific hotbeds for startups, they feel kind of lost. Like you don't get access to capital, the right connections, or the right opportunities. So how did your firm get to that point of focusing on those companies outside of that kind of ecosystem?
Yeah, so it's kind of a cool story. We're a team of three general partners. We all have this experience of investing in these ecosystems before. So when we kind of set out to build 11 Wall, we wanted to kind of just double down our strategy in terms of what's worked. And kind of the way that we find founders building in these other ecosystems is through a myriad of community building efforts. So we do a lot of founder events, we do a lot of LP dinners, we do a lot of LP GP dinners. And we're fortunate to have a lot of corporate partners that we work with who are people, sometimes service providers, sometimes they're startup banks, sometimes they're lawyers, sometimes they're interim like CFO accounting firms, et cetera, that sort of thing, or outsourced CFO accounting firms. And those folks team up with us to kind of host founders at dinners, like I said, or larger kind of community luncheons. We do a lot of founder programming, so founders can be spotlighted at these luncheons. Our next big one is South by Southwest. And really what it comes down to is just, like you said, finding founders where they're at. And yeah, like it's a crazy, crazy narrative that we hear all the time. One of our GPs actually had that same experience. He's originally from Canada and felt that he had to move to SF to build his companies successfully. So he built his companies, had a nice exit, and is back in Canada. And so really kind of that entire thesis of like, hey, let's make this accessible to more people so no one has to go through that process of uprooting their entire life to move to San Francisco. And of course, everything we're all seeing in terms of just the proliferation of no-code tooling makes that really, really feasible, as in addition to just there being a ton of talent spread and evenly distributed, even though capital is not.
Yeah, I think that might be the next phase is that the capital will be kind of more spread out around the country and around the world, North America specifically, because it's a lot of things happening in California specifically right now that's some people are relocating. Like the founders of Google are now moving out because of the new taxes that are popping up there. It's so much happening. And I think in the next 3 to 5 years, we're going to see the ecosystem kind of explode more. I think this is a really good thing for a lot of founders and funds like yours who are kind of operating in that space of, hey, wherever you are, we'll come find you.
Yeah. And just to echo on that, we hear a lot of times that, and you'd be surprised, like coastal VCs do want access to these groups. It's really, when you think about it, the universe is big, not small, is what I always like to say. So, when people think about, okay, like what is the universe of opportunity of founders building outside these ecosystems? It's larger than most people think. And to your point, that means that there's obviously white space opportunity for new emerging fund managers like ourselves to go in and build. But on the flip side, there's lots of room for some of those larger legacy firms that have been around a long time to team up with us and syndicate amazing deals in these ecosystems as well.
Yes, I can just see that being where it's going for sure. So we talked a little bit about the future. I want to get a little bit into your journey, your history as an investor yourself. I think this always tells me a lot about an investor, how they got started. Please tell us about your first deal.
Yeah, of course. So I'm probably not going to say the name, but I'll speak it in very specific details. So essentially, I sourced this company as the first deal I worked on, and specifically when that company came in, it was through kind of earlier like pre-seed firms that the firm had a lot of relations with, and so we had a very high point of view of that founding team. I took the first call with kind of that company, was able to really kind of work the deal from start all the way through finish. When I say start through finish, I'm talking about doing all of the diligence work. So a lot of times founders aren't familiar with like what an investment diligence process looks like. So happy to zoom in a little bit more there. A good way to think about it is the same way kind of your customers should be doing a lot of diligence on you. VCs have to do probably at least 4 times that amount of diligence because we have a
Yeah.
fiduciary duty to our LPs. And when I say LPs, I'm referring to limited partners who are people who invest in venture funds. So, specifically, in terms of the diligence process with that company and that firm, the way that it worked is as a principal, I was responsible for all aspects from all the way from introduction call all the way through to writing the diligence memo, which entails doing all the customer calls, all the industry expert calls, talking with potential strategic partners as well, and really trying to understand for the most part, like specifically, why are people like their customers advocating for this company and like why are they loyal to this product, but also in the longer term view, like what is that future product roadmap that keeps them excited and keeps them engaged, because large enterprises need to be invested in a company for not just 1 year, right? Like we're talking about like multi-year contracts and making sure that they're top of mind and you're building with your customers and your customers feel that you're building for them. And so after kind of that due diligence process, again, it's like now we have to actually get everyone really excited about it internally. The way that firm is structured, Cultivation Capital, they have about 7 general partners. So it's really about like finding ways to get everyone aligned and excited about that company. So of course, like throughout the diligence process, I'm giving updates, etc., trying to make sure everyone's continuing to be excited. And then of course, at some point, everyone has to kind of raise their hand and say, we want to do this deal. Not all firms are structured that way, but a lot of firms do try and have some form of consensus or majority that's eager and excited about deals. And then each fund has obviously a different decision-making process. So after that, again, it's presenting to an investment committee. The investment committee, depending on the structure of the fund, could just be the general partners. Some people will have what's called an LPAC, which is essentially an advisory committee of their LPs. So it's an external IC so that LPs can get excited and eager about deals. And in some cases, they might want to invest alongside in what's called a sidecar. So that was really kind of how the first deal structure or the first deal I did with worked in terms of internally. And then externally, what's been really cool about that company, or if I'm not sharing the name, they recently raised a sizable Series C round. And as a consequence, Cultivation was able to exit with an 11x outcome. So our initial, $2 million check returned 26 million. So super, super great outcome in less than about 3 years. So again, like when it comes down to how your first deal, a lot of people say like they have first deal luck. Unfortunately, I guess that I had that as well in terms of double digit exit.
Yeah, I would definitely say, listeners out there, that is an anomaly from the first deals we've heard here on the show for sure. And so, since that time, how has your investment philosophy evolved? Because I'm pretty sure when you started, you kind of had one perspective, and as the years have gone on, you've just learned so much. So, how have you seen yourself change as an investor?
Yeah. And maybe I'll kind of like zoom out a little bit to just my background. So I started off my venture career at a fund called Cultivation Capital. Cultivation has been around north of 10 plus years. The firm has a very large team, which is not typical in venture. And so in kind of that structure, you're very much so incentivized to just like find the best deals, get them in front of 1 or 2 partners you feel really excited about. And so it's a lot of internal politics to get people excited to do your deals. So that was actually like a really cool way to start my venture career because so many people at larger firms will say like, no one ever wants to do my deals, but I got to learn kind of the internal persuasion, internal politicking to actually get people excited about my deals so that people then, even on deals I wasn't on, some of the general partner or wasn't on, general partners would reach out to me and be like, oh, I want you on this deal just because of that kind of internal relationshiping. That kind of was a forcing function of just having reporting into 7 general partners versus most people probably are reporting into 1 or 2. After Cultivation, I went to a firm called Latimer Ventures. Latimer Ventures' entire focus is really on Black and Latinx founders. We were also a Fund 1 at the time, so a lot of my time was spent not only sourcing great companies, but also fundraising, being in LP meetings, understanding the different flavors of LPs, how that relates to what deals they get excited about, being comfortable talking about our deals to LPs, and all of those kind of nuances that come with not just fundraising, but building a fund from the ground up. And then after Latimer, moved over and was one of three founding general partners to launch 11 Wall here. So when you think about kind of like how my investment thesis has evolved, I'd say, I went from kind of the large established fund to the super, super early fund, and then thinking, I wonder what I'll do next, and ended up at another early fund. But the main difference with 11 Wall is that we're really kind of, I think, focusing on a really unique and interesting opportunity set. So our investment thesis is really about vertical AI specifically, like I said. And when we say vertical AI, we're talking about like, is this a founder building for a very specific industry pain point from lived experience? So it's a great way to think about, someone who's an industry operator or someone who's been a customer. So they have this industry experience. What ends up happening that translates into really strong early indications of commercial traction, right? Like they're able to
Yes.
get big name logos early on. They're able to have like their first few customers kind of just lingering around them because they've been in the space that long. And so we really like to
And
see that at 11 Wall. Go ahead.
I think one of the kind of secrets in the vertical AI space specifically are consultants. A lot of consultants have this 5, 10 year experience in one particular market or industry. They work with a ton of people. They usually have some kind of like deep, deep skills and technical knowledge in the space. And if they've run an agency or a consultancy, like whatever, for a long period of time, like 5 years, they just seem like some of the best founders, specifically in vertical AI, because of their experience and knowledge within that space. Like I don't know, I'm just seeing that trend a lot with like I think the best example is accounting. I know a guy who's an accountant. He's building AI accounting software. He knows exactly what problems to solve with that AI accounting software versus somebody that's just jumping in trying to make money in the AI space. You know what I mean? There's a big difference.
Yeah. And so great, going back to that kind of first deal, that founder actually had started off basically almost with a services business and then built loyalty with the kind of customers. And not to say consulting and services is interchangeable, obviously it's different, but I think a lot of times people are talking now about like there's this blend of AI services that lends towards one, like customers are really open and excited for you to kind of spend that proximity with them and spend that much time with them and hear their problems in firsthand capacity. And so what ends up happening is people get really, really close to those customers and can really tailor that almost insider expertise, insider knowledge into a tech solution that they develop further down the line. And they already have those, again, like early champions in those large enterprise organizations ready to adopt the tool in terms of pilots or potential adoptions. So I definitely think that could work. And I think what's been interesting too is how that will relate back to bigger consulting firms starting to actually want to have more people vertically focused, which was probably going to be the next trend we see. But again, like we don't see it as much. We see it more specifically like true kind of operators or someone who's truly been on like the buying end as that customer initially, and so they know exactly what the competitive landscape looks like as well.
Yes, 100% agree. That experience and skill set is it's so important in this space. And that kind of perfect segue into our next segment here. I want to know what you look for in founders. Like what's the thing that stands out to you immediately that's like a green flag, like this is a perfect founder that I would love to work with?
Yeah, so I think when it comes to green flags, obviously everyone says the obvious one is like founders who, know their numbers. I kind of would say my strong preference is for founders who are good at sales. What happens a lot when we look at kind of just the trends and everyone will say, oh, like, is AI all hype? People think about all these horizontal solutions and, foundation models, et cetera. And they kind of have this prototype in their mind of specifically a technical co-founder. And technical co-founders are great. Like we love to see a technical co-founder early on. But it's also really powerful to know that there is a founder on the earliest stages that can sell. Because at the end of the day, like sales is so important. Typically, like what we'll see from seed to Series A stage is it's all about founder-led direct sales. So if one of you can't sell, like we have a problem. And typically, I think the best case scenario, most founders who are good at selling are very good at fundraising. And the best advice I always give folks who are new to understanding like venture think of VCs as minority investors, right? Like we are, right? And so because of that, we're actually betting on the probability that folks will come in later on. And folks will come in later on and
Yes.
want to be a majority, bigger piece of this pie. And because of that, we have to have the confidence, not only that you're able to sell and build a scalable business, of course, and build the go to market motions that can be repeatable as you scale up. But on the flip side, we also have to have confidence that you will be able to fundraise again, probably Series A, again, probably Series B, again, probably Series C, and then, at some point, hopefully get to that IPO or M&A event in a meaningful way because, again, you're able to build sort of these like loyal either advocates or customers or strategic partners with the corporates, et cetera. But it's that relationshiping, and it all kind of relates back to fundraising, of course, at its core, but even more broadly, I think you can find it in the founders who are good at sales.
Sales is becoming very underrated. I think distribution overall, because so many people are focused on the technical side because of like vibe coding and those things, it makes it easier to, even if you're not technical, to appear technical, like, because you can go and make something using AI really, really fast. But I think the perfect balance for a lot of startups now is going to be technical co-founder and then like a sales co-founder. Those two together can just create some magic. If you got one person who's like the people person who can speak at the events and go on stage and rally people, they'll be helpful in hiring and all of that stuff. And then the developer, the technical person is going to know how to build a really strong product. You put those two together and this can be an unstoppable duo, honestly.
Yeah. And again, like a lot of times it's less common, but there are certainly technical co-founders out there who are good at sales and who are good at fundraising. It is very few in my experience, but definitely I think leaning into that skill set, if you don't have it in yourself, finding it in a co-founder, or at least because the weird thing is people try and fill it sometimes with like having members from the advisory board on a call or having all these external champions. And it's not really the same because we need to know at the end of the day who truly is on your team that's going to generate revenue for this company.
Yeah, yeah, generate the revenue. So, what's some of the red flags that you look for? I've heard so many answers to this question. It's one of my personal favorites. I feel like every time I ask an investor this, I get a wildly different answer. So, I'm excited to hear this from you.
So I'd say probably my biggest red flag, probably I'd say two. One, it's less common now, but when I started venture, it was like, peak ZERP, so zero interest rate period. Founders would be trying to rush diligence or rush me all the time. And the funny thing about rushing people, it's not going to change their mind. There's never a time where you give someone less time to decide. And again, maybe this is specific to me, but at least in my experience, if someone is trying to rush me, now I'm worried. I'm wondering, is there something I may have missed? And where do I need
They're
to
hiding something.
double click? And why are you rushing me? It creates this odd, almost negative feedback loop. Like, who is this person? Like, did I miss something in diligence? So it kind of has like a downstream effect where most founders who've tried to rush me, I've been able to find things about them. I'm like, we're definitely passing on this. Like almost, not always, but very often, the founders are trying to rush. It's like, oh, they just lost a term sheet from this big top tier firm. Oh, these pilots, no one knows what's going to happen with them. The pilots might not be going well. It's all these horror stories from the founders who try and rush you. So I always say, like, some people don't want to, it's very popular, very trendy to say, I don't want to lose out on a deal because of timing. I get that. But I will tell you, as an investor, the most important thing to me is like, I am covering my ASS. And so I don't want to miss something in diligence because you told me to rush. And that's just not going to happen. So that I'd say that's my one red flag. And then the two red flag would probably be, and it's less common, but unfortunately it does happen, just lying in general. Like a lot of founders, I don't know when this started, but they'll say, we're talking with XYZ fund, we're in later stages of diligence with them. I'm not saying I know everyone, but I know pretty close to everyone. So usually most times when people say that, I'll send a nice text, I'll check in, and people on the other side will say, I don't know who you're talking about. We've never spoken with them. And so it's a blatant lie that's now exposed. In venture and doing a round together, fundraising specifically, it is all about building trust. So if we cannot get to a place where we have mutual trust because you're telling me things that are not true, there's no way for us to move forward. And it's definitely, I think, an immediate pass.
Oh man, that's such a bad look. And I think founders are too pressured to push the issue. That's where the line comes from and the lack of patience. It's this weird scarcity approach to fundraising, which is the exact opposite energy you need to have. Because I think once you get caught doing something like that, it's really hard to come back from because now everybody
There's
looks
no
at you.
way.
You're judged now, and it's not because it's unjustly, it's because of your actions, and you really can't reverse that. You can't put the genie back in the bottle.
And I don't know when that trend started happening, but it's definitely like, people are trying to flex a little bit, right? And it's okay to flex. It's personally flexing is not for me. I don't like flexing. So like personality wise, like we're probably going to see each other at board meetings, and that'll be like the extent of our dynamic, founder and investor, if you're like a big flexing person. But if you're flexing and it's not true, now I'm wondering, are you lying about your numbers? Like, what else could you be lying about to me? And why are you lying, right? Like, is something really wrong with the business? It creates, again, that negative feedback loop where it's now I'm thinking, oh, I have to either do a lot more diligence or I have to immediately pass.
Yeah, I can understand how that will be frustrating as an investor. And so let's get into some practical advice for the founders, right? If a founder is reaching out to you and they're trying to work with you, what's some advice for them in terms of approaching you specifically? How do you like to be approached by founders?
Yeah, of course. So I think, BC has changed a lot. It used to be that people would say, you need a warm intro to talk to me. I don't think most VCs are still like that. Maybe it does place some credibility. You get more street cred, if you will, for having a really strong, warm intro. But I think most VCs are pretty accessible. So, like, you can go to their LinkedIn, you can find their email. If you really want to go the extra mile, you could message them on LinkedIn. And I think what I've started noticing too, in terms of founders, the best founders that reach out, how they reach out is not as salesy. So I think it's important to understand like a few things. So one, I always say like understand like what actually is the person you're reaching out to, like what is their actual investment thesis. So you'd be surprised, like I am very vocal on LinkedIn about like what we invest in, what I get excited about. And still a lot of times founders from all different industries will, message me on LinkedIn that they'll already go into pitch mode. And it's kind of awkward if someone's pitching you before even qualifying if you're a right lead for them. Because now I'm wondering, oh, they might not even know who their actual customers are. They might not know who their actual investors are going to be. They might not understand how this works. And so I think like really step one is qualifying who are you actually reaching out to? Do they actually invest in this space? I had someone message me on LinkedIn last week. I politely passed because it was not outside of thesis, or excuse me, it was outside our thesis, and they still asked for a meeting. So I think that's what I'm like, okay. So in terms of
Oh,
founder etiquette, I think one, qualifying the lead. If you get a polite no, accept it, move on, and find your people, right? So the best advice one of my friends always says is sales is really just next caller, right? Like it's just about that next caller mentality. Don't personalize these no's, don't wear them on your heart, just move on to the next caller, right? And so I think a lot of times in terms of founder etiquette, there's this piece of trying to convince me I'm wrong sometimes. And that's okay
mm.
if you think I'm wrong, right? Like we don't have to agree. Like I want you to build your business how you want to build your business. But at the same time, I have a fiduciary duty to my LPs to invest capital the way I told them I would. So I can't that doesn't mean I can just arbitrarily toss caution to the wind and invest in your company because you're telling me I'm wrong, right? So it's finding these ways I think to have just a bit more of the etiquette of saying like, okay, if someone politely passes, just go to the next caller, focus on finding your people, spin your wheels trying to convince me that I'm wrong.
Yeah, that's not a good look. That comes off as like an ego play or like your feelings are hurt. And I think the best way to prove somebody wrong is to just go win. That's just the
Exactly.
best
Yes.
outcome to
Literally.
have. Going, be successful, get all the customers, raise the capital, so then you can look back on those investors that passed on you and say, "See, you missed out." I think that's way better
Mhm.
than being on a Zoom call or at a dinner going back and forth because you're not going to win that battle. Like you need money from them. That doesn't make
And the
sense.
funny thing about that too, it's like, who knows my investment thesis better, me or you, right? So to some extent, to your point, it's not necessarily like a battle that I think most founders realize that they're like putting themselves in, right? Like,
And I hear that a lot from a lot of investors is that some founders have too much ego. I think that plays into the idea that you kind of have to be really mean or be an asshole to be a successful CEO. And if you're not this mean person, then nothing gets done. And it's just a weird trope that some founders try to live by. And they're kind of cosplaying as a founder versus going into the trenches and actually doing the work. Like that's all that really matters. It's all investors really care about. What are your numbers? What does it look like? What's the projection of this thing? The team you built, those kind of things. The ego stuff, it's really played out at this point.
yeah, no, I fully agree. And it's funny, I think, it used to be that people would say, like, oh, like all VCs are jerks. And I remember when I first started in venture, people kind of told me, like, oh, like you're too nice, it's not going to work out for you, that sort of thing. Not to say like they didn't think I would be successful in venture, but they thought that I would, because a lot of women venture is awful culture, so a lot of female investors do leave out. And I disagreed, obviously, but for the most part, I think venture is changing where there is this new increased accountability just from how online people are. So if you're an investor, if you're a founder, being a jerk, someone is going to find out. It's not this
Yeah.
kind of protective layer that it used to be because people are super vocal on X, they're vocal on LinkedIn. So I think it always just pays to be nice. And usually the best founders, the most successful ones, are pretty coachable. And I think a lot
Yes.
of VCs do screen for coachability early on. So again, like when you go to this place of like, I know everything and super ego led or, defensive, it kind of creates this narrative where you might be perceived as difficult to work with. And that could be a pass in itself.
Totally agree. And I'm saying that because I have the luxury to kind of sit in the middle of like the startup town square and talk to all sides of the marketplace. And after a year of doing this, it's so interesting how I've seen it evolve in just a year. And like all the chaos and drama I hear about on the show. It doesn't go live, but I hear about everything. Sometimes the green room of my podcast turns into like a Real Housewives set. Like I get to hear all kind of stuff, which is good and bad. I don't put anything out there. I'm very good about keeping it behind closed doors. Man, this was an incredible conversation. Can founders reach out to you on LinkedIn? Do you want to hear from these great founders tuning into the show?
Yeah, so definitely follow me on LinkedIn, shoot me a message. Like I said, when it comes to our kind of thesis and the founders that we can, be most excited about and find ways to invest in, it's really vertical specific tools. So again, like people who are building for healthcare, fintech, insurtech, logistics, and who are again like at that seed stage. And then I guess my biggest takeaway is I always say like let's all win is kind of my sign off. When I say let's all win, I think people think it's just about like, oh, like that sounds nice. But to me, I think like humility is like very important and it should be a grounding force on the investor side and the founder side. So I think, if there's any takeaway I can share, it's like being kind and being open helps founders, helps investors, and it helps us all to collaborate together. And that's kind of like our core thesis at 11 Wall and why we do so much community building work is because we call it abundance mindset. And that comes from a place of let's all win. So that's all.
I love it. I love it. Thank you again for being here, sharing your insight.
Thanks so much.